Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 283 on August the 11th, 2023. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Rite Aid Corporation, BP, British Petroleum, and Cisco Systems. And we discuss three new trades on Yellow Corporation, Cameco Corporation, and AMC Entertainment Holdings. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. And for anyone that wants to learn how to trade options, I teach students how to trade options, not just study theory, with a combination of videos and live coaching calls. So if you're ready to take your trading to the next level, send me an email to schedule a phone call. Now, the markets finished the week with fairly little change. The Dow Jones Industrial Average gained 215 points, closing at 35,281 points. The S&P 500 index lost 13 points, ending the week at 4,464 points. And now it's time for the topic of the week. The topic of the week this week is tracking your trading results. There's a saying that says something along the lines of what gets measured gets managed. I believe it was Peter Drucker who said this quote. And when it comes to trading, this is absolutely correct. You might say to yourself that your account balance is the ultimate measure. While this is true, your account balance is the result of several trading decisions. And the only way to improve those decisions is to measure and manage them. For this reason, I like using a trading journal. A trading journal is simply a way for me to track the entry price and exit price of various trades. I sometimes even write down the reason or logic behind making the trade. Keeping a chronicle of my logic for making the trade makes the journal even more valuable to me. Over time, as you make more trades, you might find that you're consistently profitable with a certain strategy or a particular situation in the stock, like earnings or a certain technical analysis formation. I know of dozens of traders who use trade journals to improve their trading results. The main reason why it works so well, especially if you journal your reasoning for making the trade, is that it will make you aware of the conscious and subconscious systems that might be leading you to profit or to loss. I've tracked my trades in manually written journals. I've also tracked my trades in spreadsheets on my computer using Excel. No matter which method you choose, just be consistent and start tracking your trades. It'll make you a much better trader. All right, let's get into the trade review from last week. We're going to start off with our covered call on Rite Aid Corporation, symbol R as in Romeo, A as in Alpha, D as in Delta. At the time, the stock was trading for $2.67 per share, and I looked at buying stock and selling the August 3 call at 35 cents, which could give us a return of 25.47% in 2 weeks. Well, shares of Rite Aid Corporation lost 37 cents, which is actually pretty significant given the size of the stock, ending the week at $2.30 per share. The call option we sold lost 10 cents, leaving us with a net loss of 12 cents on the week if we were to close the trade immediately. Now, I certainly wouldn't make any adjustments at this point. I'd let the call option expire worthless and look to sell the September 3 call when September kicks in after this expires. So that currently is bid for 25 cents. That would mean that you've taken in 60 cents a premium by selling options if these prices were to hold. That's already a nice return on the cash used to buy that stock. So that's one of the ways that I would look at managing this trade. Now, if you don't want to hold on to the stock into the next month, keep an eye on the stock price and the option price to see about closing the trade out at or before expiration. Of course, you can close it out now for a net loss of 12 cents and just move on. So it just depends on what you really want. Closing out early might lead to a small loss, but it would free up a little bit of capital to make another trade. And even more importantly, sometimes taking a loss on a trade and walking away just frees up the mental space, right? Anyone that's traded for a while, especially if you've ever had a losing trade that you're trying to manage, you know how much space in your head that can it just take up emotionally with thoughts of how to strategize, how to win. And so sometimes just take the L, walk away, prepare for the next trade. It just all depends on your risk tolerance and the amount of capital you have. Next up, we had the credit spread on BP, British Petroleum, symbol B as in Bravo, P as in Papa. At the time, the stock was trading for $36.80 per share. I looked at selling the August 36.5, 36 put spread at 17 cents, which could give us a maximum possible loss of 33 cents per spread. Well, shares of BP rose 30 cents, ending the week at $37.10 per share. The out-of-the-money put spread that we sold is still out of the money, which means this trade is working. Now, if the price remains above $36.50 per share over the next 5 business days, this spread is going to expire worthless, allowing us to keep the full premium that we collected for selling the spread. So this trade is working out as planned, so no adjustments are needed on this one at all. And then our final trade from last week was the debit spread on Cisco Systems, symbol C as in Charlie, S as in Sierra, C as in Charlie, O as in Oscar. At the time, the stock was trading for $52.63 per share. I looked at buying the August 52 half call spread, for 31 cents, which could give us a maximum gain of 19 cents, or that would be a 61.29% return in 2 weeks. Well, shares of Cisco rose $1.16, ending the week at $53.79 per share. The in-the-money call spread that we bought is now even more in the money, and if shares remain above $52.50 over the next 5 days, this spread will expire fully in the money, and we will have earned our 61.29% return on capital. Not bad for a 2-week trade. So stay on top of the stock price in case you need to make an adjustment this week, like if something happens. But so far, so good. No adjustments are needed at this one, on this one, and it's looking like it's going to walk away a winner for that one as well. So I love winning trades. I do love making money. It really is both just about winning and about the strategy and having the confidence that even if a trade starts to lose, I know how to maneuver my way out of it. And I'll tell you, it's taken years and years for me to have that confidence. And that's why I like coaching people so much. It's trying to shave the amount of time that it takes for you to get where I am from where you started. I mean, I started at 0, trust me. And the way we used to trade options was fully based on volatility, not on position management. So when you're trading volatility, you're using the Greeks. And that was like learning an entirely new language. I might do a quick 5-minute Greek explanation next week, just so those of you who are listening for the first time or who are new will have a better understanding of why you don't hear me talking about delta, gamma, theta, vega, rho on this show. It's not as relevant to the style of trading that I use. And I've gone back and forth with dozens of traders to back this up, and all of them have agreed. So I'll explain that on the next show. I'll have to make sure I remember to do that for our topic of the week. That being said, let's dive into the new trades. So before we get into that, though, we are 1 week away from August expiration. So all new trades this week will use the September 15th expiration for monthly options for the month of September. Now let's get into the new trades for this upcoming week. Looking at the covered call, looking at a smaller company here. Mostly, I'll just say as a caveat, the reason I like doing covered calls on these penny stocks, these stocks are worth less than $5 per share, is because they consume so little capital. And when you trade a covered call, your biggest risk is in the stock price going down. Well, these shares are so low already that if they go down, it really isn't going to hurt us to keep it. Plus, you still have an opportunity to have a truly abnormal return on your capital. So we're going to start off with Yellow Corporation, symbol Y as in Yankee, E as in Echo, L as in Lima, L as in Lima. The stock ended the week at $1.86 per share. I'm looking at buying stock and selling that September 2 call at 30 cents, which could give us a maximum return of 23.66% in 5 weeks. Now you enter this trade by buying stock for $1.86 and selling the September 2 call at 30 cents. This trade makes the most money if stock prices finish above $2 per share. The break-even price on this trade is $1.56 per share, and in real terms, the stock purchase will require $186 and you'll collect $30 for selling the option. Next up, we have the credit spread on Cameco Corporation, symbol C as in Charlie, C as in Charlie, and J as in Juliet. The stock ended the week at $34.79 per share. I'm looking at selling the September 34-33 put spread at 33 cents. That could give us a maximum possible loss of 67 cents per spread. Now you enter this trade by selling the September 34 put at $1.04 and concurrently buying the September 33 put for 71 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $34 per share. The break-even price on this trade is $33.67 per share, and in real terms, you'll collect $33 per spread that you sell and have $67 at risk. And then our final trade for the show is going to be a debit spread looking at AMC Entertainment Holdings, symbol A as in Alpha, M as in Mike, C as in Charlie. The stock ended the week at $5.26 per share. I'm looking at buying the September 4.5 5 call spread for 23 cents, which could give us a maximum gain of 27 cents, or that would be a 117.39% return in 5 weeks. You enter this trade by buying the September 4.5 call for $1.15 and concurrently selling the September 5 call at 92 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $5 per share. The break-even price on this trade is $4.73 per share, and in real terms, you'll pay $23 to enter this spread, and your maximum gain is $27 per spread. Now, let's talk about this one just a little bit off the record. You guys might see that, it's rare that I have a trade that has a 117.39% return, i.e. you can more than double your money on this trade. And this is still a spread that's in the money. So assuming that you can actually enter this trade again on Monday, the biggest thing is I would expect the stock price to go lower. This goes back to a topic of the week that I had quite a while ago, saying that the option price is telling you something. But what I'm betting on, or what I'm counting on with this trade, is two things. Number one, if the price goes lower, let's say price goes below $4.50, I know how to flip this trade, make it a credit spread, and likely get my 23 cents of risk back. That's number one. Number two, while I expect this stock to go lower, I like how the chart actually looks and what that means from a support and resistance standpoint, and I'm willing to take the bet. So paying 23 cents means I only have $23 per spread at risk. And the best part about it is, like, I have 5 weeks. We know that there are 5 weeks left in this trade, and AMC will likely go up and down and up and down in that time frame. So this is a very cheap, in the money, longer term trade that I'm willing to make, and that's why it looks like you can double your money. But it's rare that we have the opportunity. I did a double take myself, trust me. It's rare that you have the opportunity to possibly double your money, but just know that this stock price or this spread price is giving me an indication that this stock is probably going to go a little bit lower before it goes higher. So you have to manage your expectations, manage the risk, and be ready to trade. No one's going to give you anything in these markets. You got to be ready to take it, ready to trade, and have a strategy on what's next or what you're going to do if anything goes awry. So that's it for this week's show. I did also want to mention that I did a technical analysis video on Cameco Corporation on my other YouTube channel. I'm going to post that video into the video section of the weeklyoption.com website. It's just going to be, I'll list it as a bonus. It actually is listed as option and technical analysis trades, Cameco Corporation, and I also talked about Lee Auto Group. This was made on Thursday night, August the 10th, so it was made last night. But I really think you guys might benefit, or you might enjoy seeing me cover a little bit of technical analysis, and also seeing me flip over to the option pricing and show you what I'm actually looking at, or what I'm seeing when I'm trying to find trades. People always ask me how I find trades. This is going to be, if you want to see how the sausage is made, this is truly it. It's not overly complicated. I just make sure that I'm consistent and I track my trades so that I get my process even better. So if you have any questions about the video or about the show, about anything on the show, feel free to email me. Thank you guys so much for listening. Thank you for sharing this with your friends who are learning to trade options also. And as always, have a great weekend and happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.